plenty on, as we know. It always is. Lots are happening, particularly in the States. I guess the most important thing here was Trump trashing Powell. I think that was a very positive thing, what he said, but the market certainly took it quite negatively, with the Dow sort of significantly dropping, some stage around about 3.5%. Also, gold sort of on the back of this went to another record high. Trump also indicated, obviously, that he wants Powell to step aside. He says that the economy needs more rate cuts. We've got more tariff threats from Trump. That's on copper, semiconductors, pharmaceuticals, and lumber. And obviously, ECB cut rates by 25 basis points. And we talked about what's actually happening, particularly in the US. People are not confident with what's actually happening. Although everyone voted him and Trump has, all the power to be able to put what he wants in and no one to negotiate with, is a little bit of cause for concern. I think when you look at Powell, the Fed has always sort of had a independent status, and that they would guide monetary policy and the economy, to make sure that it's steady, stable, and has elements of growth. I think the tariffs that they put in, we've mentioned quite a few times, the tariffs, they are inflationary, they do not work. It just creates more tension, and that's exactly what we're starting to play out. So the market's sort of getting a little bit concerned on that. Hence, we saw quite a large sell-off last night. And that was across the board. I think when you really get down to the nuts and bolts of it, there are other ways. When you really get down to the nuts and bolts of it, the US has a problem, and we know that. When you look at government debt to GDP, you look at 100%, 120% of GDP, which is just a number which is not sustainable. It doesn't mean that the US is actually bankrupt, but it just means it's a funding issue. And when you think that the interest bill on the deficit is such that soon it'll overtake military spending and Medicare, then you think it's a sizable waste of money. So I think at the heart of it, although Trump wants to see America great again, that's his key, he's going about it in a way that's a quick fix. And obviously that's via the tariffs. He's going to raise a lot of money, and I'm sure that will go into the deficit as such. He obviously wants Powell to react to that as well to help his cause, because he actually believes this is his mandate to try and make America great again. Whilst putting tariffs up, protecting industry, he's also receiving a lot of funds, and those funds will be put to good use in terms of the deficit, I'm sure. Now, on the back of that, there has been a lot more lost confidence. Time will really tell on this, but the US dollar continues to go lower. I think the interesting thing here with the US dollar, obviously we're up around about 106, and then now we're down at 98, probably going lower as well. In fact, I think a fair bit lower. I actually think, without actually saying it, that there'll be a weaker dollar policy starting to come out, because a weaker dollar does stimulate exports. And if you're trying to grow within, having a weak currency actually helps your exports become more competitive. And I think a policy like that will stimulate good growth as well. So whether they like it or not, if the policy is for a weaker US dollar, then I probably expect that to continue. On the backdrop of that, a weaker dollar is also good for commodities, and also good for those currencies like the Aussie. Okay, so I guess when you look at it, the tariffs are here. In this week's report, we've spent a lot of time on this, just basically going through what happens when you put these tariffs on. So I think it's a good means, to create confusion. It's a good means for us to get into the local equity market when we do have a little bit of a pullback. At the moment, I wouldn't be doing anything, but I think it is a problem down the track, and I think the market's seeing that. Every economist that I've talked to, and I'm also an economist, it isn't good. Will Trump pull something out of the hat? I really don't know. I think when I look down at it, I say, the tariffs protect domestic industries, they correct trade imbalances, there's potential for retaliation on foreign trade policies. There'll be a whole lot of things, I think, which and also a form of economic nationalisation as well. But they're inefficient, and they're counterproductive. And I think we've talked a lot about that, and we've outlined it in this report again, what we actually feel about tariffs. And I think also when they move, there are other means that he could have used, to try and get at that deficit. But one thing I do agree with, that he's just got to try and get that deficit down. And I do think that that's a real key to really get that down, so that just basically so that the US can be on a stable footing. It is the number one largest economy, and when you are paying most of your income to US bondholders, that to me is not the right thing to do. I mean, in an analogy, when we look at the Smoot-Hawley Tariff Act in 1930, it's actually worse than the Great Depression. Although it was meant to be supportive, it actually came out and negatively and pushed that depression further and further along the track. So I think when you look at all the studies, it doesn't point to something positive. So we're just going to bunker down. So what would I do in terms of investing? I think that to me is the important thing. What stocks or where would I rotate into? Am I just moving to the sideline, or am I going to see this as an opportunity to buy? I think this is a bear market. And I think when you see bear markets, and not a lot of people have seen a bear market, and when you witness a bear market, I'm old enough to have done that, you actually get a sense of how to actually trade this. Well, the right way to trade this is really to say, look, at the end of the day, things will be okay, but this bear market could last for a year, 2 years, 3 years. So you've got to be prepared to hold out for that period of time. I would not be using leverage at all. If I were to buy, then I'd buy the traditional stocks that I like, particularly in Australia, and they would be the things like, industry, the banking sector, medical areas, mining, and just slowly start to move into those positions. So if you think that at the end of the day you want to invest $1, then at these stages, and probably another 5-10%, you'll start with 5% of that. So what I'm saying is this is a slow process now, and that's how you slowly build your wealth, where you're just sort of niggling just little bites every now and then at the right level, because eventually it'll trade higher, but you want to actually be able to buy at good value. And more on that sort of as we go through this, because I think this is a structural bear market that we're actually entering into.